Greetings, market rebels. Welcome to this week's sector situation. It's April 23rd, 2023. I'm Wayne. My partner Ryan's working on the market outlook. Will be coming out later today. And this week's sector situation is going to be probably one of our shortest ones because I'm not going to waste time for folks trying to infer things. This is just one of those times that you run into over the course of time. Here's our trusty disclaimer. Here's our trusty intellectual property rights notice, and then I'm going to flash the sort of stream that we worked with for macro measure. In case you don't watch that, you could maybe pause this video or take a screenshot. But these are some of the things, if you've been following the videos, these are some of the things I talked about in macro measure, which I just finished recording. And then I'm going to flash the second one right here. I think this one's actually really a macro type thing, because just kind of thinking about what I see in the charts and some of the reading that we do and have come across. And I just think the final two lines here are really interesting right now. The performance metrics of what the market has been able to do suggests there's a very low probability that we're still in a bear market. Meanwhile, there's economic signs that have both of these, by the way, have very good track records. Those are saying there's a very high probability of a recession later this year. So, and they have good track records. So you really have a serious battle in terms of things that something's going to be dramatically wrong. Let's put it that way. But that's not really what sector situation is about. Sector situation is about trying to go into the sectors, see where money may be starting to flow, stopping to flow, and then seeing what has maybe a nice technical setup. Let's get into that let me just rearrange things a little bit and take this down since it's in our way. We don't need it. And I'll get the share going again, and we'll get this onto screen 4, which is where we start typically for sector situation. And like I said, I'm just going to cut to the chase, because the problem we have right now is that all the sectors as a group really sputtered. They're just really, if I enlarge everything, the market kind of sputtered a little bit after trying to make a breakout and reverse. Tuesday, they put a little weak attempt together and then reversed quickly, and for most of the week. But then the market was saved again by the end of the week, and things like the SPYs and Qs were able to hold on to their 10 and 20 SMAs respectively. Or at least, yeah, I think 10 and 20 is the right two with respect to SPYs and Qs. So that, I think, was a bridge to get them into this week. And now they're, I think, going to use all the mega cap EPS that we talked about in macro measure. And then next week, of course, they have FOMC and they've got Apple. So we might be bottled up in terms of what we can really do for another 10 days. Or maybe there's going to be major reactions to this stuff. We just never know for sure. But the way we've been bottled up in April has been awful. I think I've been surprised by how bad it's been, because the first quarter I thought was a great quarter for trading. Even though it was challenging, it still had a lot of opportunities in it. And I don't see that much really great stuff happening in April so far. And we only have one more week to go and we'll be through it. So kind of starting with a whimper here in Q2, if you ask me, from a trading action perspective. So if we look across here, a lot of what you would see right away is that we're seeing, let's see anything that's near, say, 55 to 45 out of all 12 of these. But you've got 1, 2, 3. You've got 4, you've got 5, you've got 6, 7. So 7 of the 12 are right there, and then a couple are just barely above 55. So you've got 56 in XTN, 56 in XLF. So most sectors are in kind of middle of the road, and that's no great revelation, but that's the thing. It's really not a momentum trading market for any sustained period. You can do quite well in Rebel Pit, concentrating on short-term stuff. So they've been able to, I think the folks in there deserve a tip of the cap, because they've been handling this market, I think, very well, because it hasn't been easy getting a lot of singles and, as I say, an occasional double. But if we look at this, the some things we can take a look at are XLY versus XLP. That's something I like to do. Well, this is okay. It's hanging in there, but you can see versus here, the two recent kind of major swing points, I think you're really in the middle. You've got to wait for those, I think, to really have any chance of really much bigger movement, another leg, in other words, developing. Staples definitely outperformed, and that's a sign of defensiveness, and the market had a defensive week. And a lot of these things just absolutely sputtered. XLB, XLI, they sputtered. It is what it is. XLV, which is, I think, more of a defensive trade, that hung in there, but it had that correction. And we did note, I think, that this was getting toasty, and then it brought that correction was brought about. But there really isn't anything wonderful to talk about here. And again, even if there was, what could I really say with it? Wouldn't include, but wait a minute, hey, there's massive mega cap earnings. There's an earnings deluge coming out this week that they could move stocks up or down dramatically based on how those reports come out relative to the consensus expectation, relative to the comments that are made on the forward-looking comments, as everyone likes to talk about, from management on the conference calls. And then you've got Apple and the Fed next week. So I just think you're bottled up. I don't want to skirt the responsibilities that I guess we have at this point to keep coming up with something hopefully interesting in the sector view. But I don't think there's a lot for us to work with. And I just feel like anything I say will be trumped by whatever news they've got out there. What I did show, sort of for a little bit in macro, I did show some sector situation stuff in there. And one of those things to me that is interesting is that when we look at, let's blow up our XTN sector so we can see that better. And I'd say that overall, this still is hanging in there, but it's kind of struggling to really work its way back toward the way much of the market has. And so if transports aren't working their way back, no, I don't think that's a great sign. That concerns me, and they're really lagging. So if they go into heavy catch-up mode, you would change your tune, but that's not really that encouraging right now. It's sort of bottled up in here. Maybe it will break out, maybe it will, but if it doesn't and it starts going back down, I think that would be a major source of concern. But they're not lighting the world on fire yet. Tried to break out above the 50, got rejected, got sent back down to the violet purple colored 200 right there, and then bounced from there back to the 100. So that's what I mean by bottled up. What can you really say about that? Definitely getting short-term higher highs, higher lows snuck in there, so we'll give it that much credit. But what happens next? We have to wait for that Thursday high to be taken out, or maybe lose the 10 SMA that's slightly below the 200 there in purple, and then maybe you get a little more downside. But we have a support line drawn in there, which will be effectively the 20 SMA. So again, I kind of think you're bottled up. I don't know where you really go unless you're above the 50 or you're below the 20. That's just the way it is right now. And so that makes it a hard read. Well, what do we read from that? How does that help us with the market? Well, I looked at these as well in macro measure, and this, I don't think this at the moment, if we took just snapshot in time, right? Just a snapshot in time, this energy rolling over the way that it did last week, you would need to see this thing put in a higher low versus back in here versus these lows, and then start to go again. Maybe it will do that, but it's good that it's got saved there on Friday and didn't crack the 100 if you're an energy bull. But all it would take would be a little more weakness. It'll be below the gold 50, and that's the last of the SMAs. Other than the fact that it would close a gap, maybe that could help for a quick turnaround. But you really don't like the fact that this thing rolled over as much as it did, as quickly as it did, after failing to break through the 200 up there in purple. So higher high that cleared out here, or fake breakout, right? False breakout. Well, right now it looks more like a false breakout in the short run, but it could just be that there's another strong leg coming if we can hold near here and then start to go up again and then break out from there. But I don't think it looks like, hey, that looks like something that's right about to start acting really bullish at this moment. Of course, that market's tough. Sometimes it's very news driven at times, so you've got to be on guard. It's not easy to trade that stuff unless you're all over what's going on in there. It's probably still not easy to trade it, but trading just isn't easy in general. But LB, let's take a look at lumber, and I'll get us the May Thinkorswim's offering these up. So we'll take those, and that's not looking all that wonderful. Lumber looks to me concerning, and that's why I pointed out XHB in macro measure to me, because it's just very curious that how it's probably you have to do a deep dive into the components, what they're set up to do. But that lost support. It's on the 20-day there in light blue. The 15's right near there in red, but that looks destined to possibly retest at this snapshot in time to retest these recent lows, or just this slightly lower levels where there maybe is a flat line. So down a little bit. Of course, Thinkorswim just keeps flipping me over to percentage, but let's take a look at, so right now we say transports, nothing special. Lumber, an important commodity, nothing special, not looking that great, to be honest. Oil looks maybe a little vulnerable, right? It's not lighting the world on fire. What about copper, right? Let's take a look at copper. And this is what Thinkorswim offers us to work with. So we'll take it. But look, that had a rough week. Copper had a rough week, and it's, again, on the verge. It's supported near here, so we don't want to get ahead of ourselves, right? But that's not, again, not something that's lighting the world on fire at this moment in time. We don't know what Monday will bring, or the week for sure will bring. But bottom line is that it tried to break out and failed, much like other things. So I don't think that's really looking that encouraging. So I think a lot of the, I don't know if you call them canary in a coal mine things, but a lot of things that you really want to see if you're a bull, transport's working, the discretionary working, different things happen at different parts of the cycle, right? So we can't act like we get all this at once. All these things working would be better. All those futures we just covered, along with transports working, along with XLF. I think the problem with XLF is that it's really more about the earnings, being able to take advantage of the earnings right now. I could be wrong, but I don't really trust this move 100% right now, because I think it was really more about, oh, look, some of these big banks are making a lot of money, which really isn't news, but they do use it every quarter to try to levitate these things for a while. But so we'll give them benefit of the doubt and say that's good. But energy stalled out last week. Transports, nothing special. Defensive sectors like XLV still kind of were bid and managed to eke out kind of a neutralish, slight pullback type of a week, which was due because it became overdone. Former leader XLC pulls back a little bit, but staples kind of outperforming discretionary isn't all that wonderful. And you even got pullbacks on what have been tried to be strong sectors again, and you kind of got stopped in your tracks on basic materials and XLI. So this is why I feel like even if we could infer, right, which we're trying to say, well, honestly, objectively, nothing special on a lot of these charts, but again, how they dictate things will largely depend, I think, on all these mega cap earnings. And we did it in macro measure. I think maybe like 7 of the top 12 weightings will be out this upcoming week. And then after that, Apple. So 8 of the top 12 will be out, I think, within the next 2 weeks. And then here's semis. And, Ryan does a really good job, because Ryan and I have always watched these. Semis really came into their own. And when we were in our early days of floor trading, and it was always something that you would, during that 90s era, you really had to keep your eyes on, I think. But it's just stayed that way. Semis are really obviously important to the modern world and how all of us live and how things really develop. But they look a little concerning. Now, they did kind of keep them near that 50 SMA in gold. But right, we did have a break. We did have this line that I'm mousing over, that resistance line, which is now a support line. They did seem to hold right near there. That was our breakout off the 50. We were looking at that saying, okay, well, if it takes out that resistance and it could try to go, that would be it. But that obviously met with rejection. That got met with rejection. So this looks vulnerable, right? If it takes that Friday low out, you could start to there you can see there's definitely flat lines in here. I mean, it's clear there's something right near the 240 and then there's 235-ish. But that's where the 100 is. But there's some room there, and I do think there's other support levels we could throw in there. It's probably something near 240. Let's see what right up in here. No, nothing's perfect right there. Probably near 245. So you got 245, you've got 240, 235. Just unfortunately, every $5, if you're a bear, you want to see that big whoosh. But this thing moves, as we all know. We had it as a name in TNT. It did move a little bit, but it wasn't easy to trade. It was just a hard week again. Awful April is what I'm going to always remember. April 2023 in terms of trading opportunities. It's not the worst I've ever seen. August of some year probably was, but just for an April, it's kind of been awful. But in my opinion, but anyway, right, that doesn't look all that wonderful. That looks vulnerable. Could you trade back down to the lower end of this channel? We ought to extend that now that we're up here. Let's put that where it is. I'll try to be as charitable as I can to the current action and be true to how you should probably get a line in there. So it's right on that support. So again, that probably becomes an even bigger deal, right? That thing, if it cracks and leaves the channel, that's a big deal. So potentially. So you've got to be ready for that. So yeah, if you see semis weakness, I don't think that's a good sign, but right, semis really have been under pressure now for really the entire month, right? So as I've been saying, April's been awful and the markets haven't done much. And probably one thing that's kept them is the success the semis had in March. They're giving a lot of it back, and that's a key part of the market that I think a lot of people look to. So that's probably put a damper on things, and that's one reason why we are struggling to go anywhere in SPY. I think the SPY dirge, we've been stuck in this kind of listless range, has just been cruddy, to borrow a Tanner Boyleism. It's just been cruddy. So that's just not fun. It just hasn't been fun trading, but we don't have a lot to work with, I don't think, here. I think you could see from our quick view of the sectors, and I'm going to keep this short because I just don't want to belabor this, but a lot of these things sputtered out. A lot of them, did come back in a little bit, as is said, the way the market did. And you're kind of in that, don't force it, right? Let's start to see something emerge in a sector and then go from there. We do look at the XAU typically when we do sector situations, so I'll do that just to give you that broad view of that space. But this is not something that should surprise us, because, and I've got the wrong chart that I'm looking at here. This shouldn't surprise us because we did say that this was overdone, right? The RSI back at this point in time was 79. And I remember we talked about that in a couple different videos. So like I said, when you get outside of your bands, that's your upper Bollinger Band here, the way I run it anyway. And there's your 79 reading. This is not that like a world event can have that continue, but in most trading circumstances, most trading trials, or whatever you want to call it, that's just very hard to sustain a trend at that point after what it did. So again, I don't think anyone that, I think is in our UOA services or watches these videos should be surprised that we finally got this pullback. So what it does next, I don't know. I don't want to root against anyone, but of course, I'm personally hoping that it backs off even more. But I don't want to belabor things. I'm trying to think if there's anything else I could cover that could be helpful here. And I did cover certain things in macro measure. Probably just in case you don't watch macro measure, I would just note that, come and even just take a trial of the Phoenix portfolio if you want to learn about how to position yourself for outer month downside protection or downside ideas that you can manage pretty easily, actually, and then be prepared to sort of strike when the time is right to get really aggressive about the downside. But I mentioned that because the VIX being as low as it is, it's probably one of your better times to at least start positioning with some of those types of downside positions you can take on. There's, of course, with options, there's practically unlimited things you can do. Ron, our former colleague and departed, unfortunately, friend, he was big on calling these crash protection puts. He had certain things he liked to do. That's still fine. Everyone's got their own way to do it. Ryan and I tend to do it in a different way and then get aggressive when things look like they're nearing that point of no return. But early as we can identify that. But anyway, you haven't seen lows like this, right, until since early 22. So that's how low the VIX is now. And that's why I'm saying it might not be a bad time, even if you just come into the Phoenix portfolio webinar for 1 week or something and ask questions about that or what have you, because that is something that's very valuable that can save you a lot of money if you use it as a hedge, or could be very lucrative, of course, if other things are just getting beat up and short-term long trades are getting beat up and then volatility starts to spike, things like that. So worth maybe a look, but just wanted to note that on the VIX, we're down there. Can we get lower? Of course, we can get much lower, and maybe we will. I'm not even thinking that will happen, but you just never know. But yeah, the VIX is really down there. And so that's something to maybe take away. And I think I'm going to probably have to end it on that, because I'm looking at some of my notes. And again, there's not much out there. So as much as I want to try to help and see if I can add something here or there that might help folks out this week, I think just maybe the best thing is that what I noted earlier of just hang in there and be patient and don't force anything. Get your single, maybe an occasional double, be happy with that until we start getting some range expansion one way or the other. And until then, I think you just have to stay super nimble. And remember, the calendar is going to probably force you to be even more nimble than you normally would be, because you're facing possible gap developments in different stocks that could influence major index ETFs that a lot of you like to trade. And they could also, of course, experience gaps as a result of that. So probably the time to be nimble and then keep a lot of your powder dry until we get through the FOMC. And then hopefully after that, we'll get a pretty good trading market developing one way or the other, something that's certainly a lot more fun than April's been so far. So on that note, I want to thank everyone for tuning in. Kept it really short because there just isn't a lot for us to sink our teeth into this week. And regardless, though, I do hope something I share with you is able to help you out maybe this week or in the future. Thank everyone for tuning in, and have a great conclusion to your weekend. Thanks again.